Alright, welcome. Sorry I'm late. My massive audience of 0. It doesn't matter anyway. I had an emergency call. Alright. What a mess we got. This right here is on news of earnings beat. Same thing with yesterday and Sunday night. Well, Friday. Companies have been reporting earnings pretty darn good, along the lines of what they've been. But you still get this. I think it's here. I think the bear market's incoming, and I have a list of evidence for that. Now, everything comes with a caveat. A little history. Last year, I was convinced of the same thing. But maybe I'll get into why it's different this time and why I'm not convinced. But it's hard to ignore the stack of evidence I have right now. Let's start with the news. I'm not going to really do my normal thing. I'm just going to go on about this and then get moving. I got lots of things to do today. Let's first take a look at one very important article. Usually, Yahoo has terrible news. Well, this is from Bloomberg. Bloomberg's not all terrible, just mostly terrible. The title is Wall Street CEO Flag High Market Valuations Pullback Risk. Now, the headline was much worse before. But this is Goldman CEO saying a 10 to 20% drawdown is likely. Now, this sounds like they're setting us up for it to happen. Now, immediately, because these people are all evil, immediately I'm thinking, well, they're just doing this to get retail to sell so they can get a better position before the rebound, which that's still a possibility. That still can happen. But it's not just this. This isn't the only news. I read the article earlier. I think who still disagrees? So this is the Goldman CEO. Now, I don't know when they said this. It was during a financial summit organized by the Hong Kong Monetary Authority. Now, that's significant. Anytime you see Hong Kong, just replace that with China. I'm not so sure how much of Hong Kong is independent anymore. So this could all be engineered by China. In fact, this just popped into my head right now. The fact that it's in the overnight move, exactly when China is trading, that could be significant. So maybe all the backroom deals that these slumlords I don't even know what to call them, slop people have. They might have gotten a heads up, but why would they tell us? They must have short positions already. Anyway, who diverged from this? Morgan Stanley? No, wait. No, Morgan Stanley's with them. Goldman Sachs is with them. There was one group that did not agree with Goldman, with everyone at Goldman and everyone at Morgan Stanley. Okay, so they just ended it with, don't try to time the market. Here's panic, but don't panic, more or less. But that's not it. So, done with the news. What's next on my list of... So maybe they're setting up a narrative for the crash. Another thing to consider is today's election day. Now this is tinfoil hat time. But the ruling party right now in the White House is Republican. They would have an incentive to do everything they could, pull all the levers, squeeze everybody they can to keep the markets elevated until today. After people vote today, all bets are off then. That's just huge speculation. I don't really know, it just popped in my head. Something to consider. The other thing is, we are what now at 23 times evaluation. And I think that means 20 years. It would take 20 years for profits from these companies to catch up to their price. Maybe it's 20 months. Either way, that's huge. So the next thing is one of the first chapters in Technical Trading Bible by Edwards and McGee. It's actually titled Technical Analysis of Stock Trends. One of the first chapters explains bear markets and bull markets and the different phases as they roll into each other. And a key point is that at the end of a bull market and the beginning of a bear market, and at the end of a bear market and the beginning of a bull market, news hugely favors one side, but the reaction isn't there. So for example, right now, profits are good news. They're coming out very good. Amazon reached all-time new highs yesterday, I think. But the overall market reaction is bad. In Edwards and McGee's opinion, that is a good sign that the bull market's over. I mean, they really would have said the bull market was over last month when every single news outlet was putting out wonderful, wonderful news. And yet, not all markets were in step with that news. In fact, I myself found the news of 2 rate cuts. This was at the end of September, maybe beginning of October. News came out, 2 rate cuts. There's a whole bunch of AI money moving around. Everything was looking golden and peachy. The market reacted positive, but not as much as I would have thought. Great. Hold on one sec, technical difficulties. There we go. Here's the ES futures on the daily. Beginning of September, towards the end of September. I don't remember exactly when it came out. I think it was right around here. That is a lot more muted. And look at the volume. Heading down into, well, I'm going to call tariff day. But a lot of people were saying during this is that there's a lot of other factors involved. And I agree. And since then, we can take a look at the volume. I'm going to look at a SPY instead. Shoot, I don't have a... Here, we'll do it like this. On the right, I have daily SPY. On the left, I have Bitcoin. You can see the rally after tariff day as things began to return to normal. The volume level of this huge jump up in price does not match past rallies. And red days, volume's higher than anything positive days could output. Now you might see this a little bit in the past. No, I think it's kind of starting now. Well, you could see it a little bit in the past. Beginning of September, there was rumbles. I remember at that point they were calling it seasonal. Which, yeah, could be. But I chose this page because it's another huge sign. Since April, we've had a pretty good bull market. Let me see if I can size this correctly. Bitcoin was mostly correlated. Not exactly correlated, obviously, but the rises in Bitcoin are much more volatile. As you can see, it's like a, what you call a bull flag? Multiple bull flags. Which I believe in Edwards and McGee, they do note that bull flags, while they are a bullish sign, obviously, they are sometimes a sign of weakness in markets. doubt, I would call it. But ever since July, Bitcoin has not been keeping up. You see a completely different meltdown. And then instead of a bull flag, we have a failed bull flag, basically. And a head and shoulders kind of forming here. This could get much worse from the head and shoulders I'm seeing. Especially with the slant of it too. Wow. Should short Bitcoin. But you don't see, as the S&P was going up, the SPY, after Tariff Tuesday, was it Tuesday? What is it, Tuesday? Tariff Friday. Tariff Tuesday just makes much more sense. But it's not, it's not what happened. Bitcoin has not really recovered and has continued lower highs and lower lows. So the last thing I want to look at, sentiment gauges. I don't like the fear and greed index, but let's look at that anyway. I think it's a pretty poor gauge, which it didn't really move. It's been in this area for quite a while, I guess. Okay. 1 week ago. Yeah, I wouldn't really call this that great of an indicator of, maybe in a shorter term it's valuable, but in a longer term I wouldn't really pay much attention to it. As you can see, a year ago we were pretty fearful. Now let's look at November of last year. We were kind of at a top, November of last year. Right here we are. We were heading into a huge correction. A lot of it, people would say, was brought on by tariffs. Before we recovered and then some. But I could see, so they're calling for a 10 to 20% decrease. Let's see what that looks like in real numbers. Current price of, let's take the pre-market price, 676. Geez, that's a $135 decline. Looking at 541. Yeah, that's roughly where we were a year ago. A year and some change ago. It might be even more than that. but it's needed. I'm going to end with that. Markets greatly need bear markets. They need pullbacks. Markets just, it's part of the whole process. Companies don't innovate, they don't improve if their price just keeps going higher. They have no incentive. And just look at how lately companies have been treating people. They've been treating them like rags. Give them some pain in their stock price, and they'll start to innovate again. They'll start to treat customers right. There'll be people wanting to innovate. There'll be new companies trying to build. The other thing I've been noticing, I try not to watch stock twits a lot because I don't know if they're bots or real people, but just people treating bear and bull markets like sports teams. That's really strange to me. But sentiment has been, for a long time, extremely bearish. And I am not upgrading to look at sentiment before. Yeah, it's not good. Hold on to your hats. Let's take a look at all the overnight moves, take a look at VIX, and then I'm out of here. You already know, MES is down quite a bit. Price did halt near, it'd be a pivot point. Why it doesn't show on my chart here, I don't know. Oh, it's there. It's just hidden by. I don't know how to put a label on it, like right in the middle. Yeah, well. It's probably a better one made in the community. So price did fall to this pivot point before recovering slightly, but not the type of recoveries that we've been used to. I could see us today breaking that. I don't know where we will go after that. Full disclosure, I am flat. The only thing I'm shorting right now is Netflix, just because I think they suck in general. Trade what you know. And one thing I know is there is not one enjoyable program on Netflix. I wouldn't say, there's got to be one. There's not one enjoyable experience on Netflix. I don't think I've been a member of it for 5-6 years now. And a lot of people will soon realize that. In fact, I might buy more. I think I will. NQ. NQ fell, not quite to a pivot point, but getting there. This is kind of close to last Monday's open. But as you can see, we're heading there again on insane amounts and increasing bearish volume. That is significant. The Russell dropped quite a bit more. I drew a channel. Jeez, my buttons aren't working. I drew a channel on the Russell last week. It did look like it broke below that. Yesterday it kind of broke below that before slightly recovering. So another thing that Edwards and McGee always say is that the indices should be in step. Now they made that back when I think there was two major indices, industries and rail. I mean, we're talking 20s, 30s. Nowadays, I mean, you got the Russell, which is a representation of smaller cap stocks. You have the NASDAQ, which there's NASDAQ 100, and there's other NASDAQs, but mostly tech. S&P, which is just the 500 largest companies. And you still have industrials with the Dow, which is not so much industrials anymore. It's just, I don't even know how they measure it. But I would say if the Dow, the NASDAQ, and the Russell are all down, it doesn't look good. Now let's look at the Dow. And of course the Dow is down significantly. Yeah, I've got the bear fever a little bit. Very similar structure in all the overnight indices. I'm curious about gold. This is gold. Gold also falling. That is interesting. It's usually a safe haven asset. When people go to cash, they go to gold. But gold is also way overvalued. Well, you can't say overvalued for gold because gold's whatever people say it is. But it's extended. It's extended in a bull market. A huge bull market. But I wouldn't be surprised if gold, this is a daily gold, breaks back above last month's close, which is 3996.5. We're basically biting at 4,000. I don't know. I don't know what will happen. I have to understand the movements of gold. I'm just barely getting an understanding of the stock market. Maybe one day I'll graduate to gold and oil. Speaking of oil, oil is also down. Way down in the overnight. It's kind of strange that oil is kind of matching the indices in its form. I don't know. My luck, the government will announce that it's not shut down anymore, and the stock market will rebound. But I don't know. I don't think that'll happen. I mean, I don't think the government has to come back whenever. But I think the reaction to it, I don't know how people could see that as positive. Unless stock market really is not independent anymore. I think we're far away from that. Even China, being China and having a stake in every single company in their country, they're still not fully manipulated by the government yet. So I don't think we're there yet for America. But I don't know. I don't know how interconnected everything is. But that's right. I was going to place an oil trade. Man, I should keep a list. And right here is not a bad spot at all. All right, let's take a look at the VIX. That's interesting. So you have a rise in the VIX. Right in the beginning of the overnight. Sends us reeling. The VIX falls back to its original location. Price does not react. As you can see here. We didn't go back up to where we were. That too is bad. All the stars are aligning. But, I say it again, don't ever underestimate the power of manipulation. Alright, good luck, goodbye. I will be here tomorrow. Thursday I will not. Friday's up in the air right now.